Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. In today's video, I'm going to be looking at Bitcoin as per usual in the short term as well as the long term. But today I'm going to be focusing mainly on the shorter term because there is some developments which I think I need to bring to your attention so that we're all aware of what's about to happen with Bitcoin in the short term, in the next few days, maybe even in the next 24 hours to 48 hours. If I have time, I'll actually cover a little bit of Ethereum. Before we begin, the usual disclaimer, please remember all my videos are for educational purposes only and nothing in this video or any of my videos should be taken as financial advice. Please do your wider research before making any investment decisions. So with that out of the way, I'm going to start off with the weekly chart for Bitcoin, and I want you to have a quick look at this chart pattern on the weekly side. Now, I haven't seen anybody else look at this from this angle, and that is what we've got here is a descending triangle. And currently we've got two touch points here, and we're coming up to a third touch point. And the reason why that's significant is because this touch point here, if you look to the right here, the price there is at exactly around about the $51,000 level. And if you recall from the past few videos, I've been mentioning this level, the $51,000 to $52,000 mark, as a point of correction. And what this pattern tells me is that this is another confluencing factor that when we hit the 51/52,000, because the reason why I give that range is simply because if you look here, Bitcoin has a habit of protruding these trend lines before retreating back below it, and that one there as well. So it may well be that we protrude to the $52,000 mark, but certainly it looks as though we're going to have a correction around this level here. And why the 51 and 52 is very important, like I said, this is a confluencing factor here, is that if we have a look at the Fibonacci retracement from the top here at 64,900 down to the bottom here where we bottomed out, as you can see, as I've shown you in many of my previous videos, we've got the golden pocket of the 61.8 and the 65% Fibonacci retracement exactly at these levels here at 51.52. So not only do we have a very strong looking trend line on the weekly chart, which tells us that there is more than likely with a high degree of probability going to be a correction here, but the Fibonacci retracement also seems to confirm that for us. The third confluencing factor here is the historical chart pattern here, which is showing quite clearly that at this point here we had strong resistance and then that became support. So these 2 points here are telling you, and this one here, again, the price came back down here, but it got supported at exactly this point. And this candle again here, it was pushed down, but again, it was pushed back up from this level here. So if you look at these levels, it tells you what these levels are. And if we draw a box on these levels, once again, you can see quite clearly that we're at the 51 to 52,000 range here. So again, this is a third confluencing factor, which is saying that we're going to have strong resistance around these points here. And I would also say that with the strength of the rally that we've had here, look at this, 1, 2, 3, 4, 5. We've had 5 strong weekly candle closes in the last 5 weeks, and currently we're on a red candle where the heat's being taken out. Now, it looks to me as though sooner or later, maybe in the next 24 hours or 48 hours or in the next few days, we're going to protrude into this area here before we take a little tumble. Always remember that it's easier to find out the support and resistance levels because we can see them quite clearly on the chart. But what we can't see is the depth of the correction that could be emanating from there. So could it be 10%? Could it be 20%? Who knows? But certainly we need to be aware that there is a correction with a high degree of probability coming very shortly at this level here at the 51,000-52,000 mark. If the price does shoot through that level, then the next level to look out for would be the is the 78.6% level on the Fibonacci retracement, and that is currently at 57,300. So if in the unlikely event that we actually went through these levels at 51, 52, then the next level to look out for would be the 57,000. And obviously the one after that is the all-time high of the 64,900. So these are the three levels you really need to be aware of. Certainly, it is my opinion, and it is my opinion only based on what's happened in the past, because this is a 61.8 level, and we all know how strong the affinity Bitcoin has to this level, then with a very high degree of probability, we're going to have a correction around this 51, 52. However, if we do go through those levels, I just want to be clear, the next level we would be looking out for a correction would be at the 57,000 level, and certainly I would expect a correction at the all-time high to create the double top before we have a correction. Again, no one knows the depths of these corrections, but certainly I would expect anywhere between 10 to 20% at each of these points. To give us some guidance as to the depth of the correction, if we take it from the bottom here, the Fibonacci retracement level, to let's say $52,000 mark where we think the correction might be. So if we take it to around there at the 52,000, if we move it to the left so we can see the numbers clearly, the first correction point would be at the 23.6% level, which is at 46,000. So the price could come all the way from there and bounce off this before we move on. The next level below that is the 38.2, which is at 43,180. And that is definitely a possibility as well. Now, the other levels would be the 50% Fibonacci at 40,000 and the 61.8 at 37,000. Now, the reason why I don't think we're going to go down to the 61.8 or the 50%, of course, the possibility is there, but the probability in my mind is not there, simply because, as we've been seeing over the last few weeks, we've seen the hash ribbons hit the support level of $44,000. And we know that from our historical chart patterns with the hash ribbons that they've never been wrong apart from the COVID-19 situation. And every time we hit the buy signal on the hash ribbons here, that was the signal that we got at this point here. And as you can see, the price hasn't come back below that level. And that's what's happened historically. Every time we get a buy signal on the weekly chart of the hash ribbons, that is the bottom support level for Bitcoin going forward. So we're in this bull market. This, to me, the hash ribbons, if that is to be true, of course it can go wrong, and we then have to adjust our thinking, because we always have to be fluid and flexible and be prepared to respond to the market as it dictates to us. Remember, we can't dictate to the market, but the market dictates to us what it wants to do. And this hash ribbons is telling us that there is a support level at 44,000. So I'm not expecting the price to come back down, but if it does, obviously then we have to respond to that accordingly. So considering that that's a good support level, the correction that we will get at around about the 51, 52, which we anticipate, could come back all the way to the 44,000 level before we move to the upside. And if we look at this candle here, the bottom of that candle, this wick here, came to 43,900 and it bounced off there after this hash ribbon had hit. So it looks like, from a chartist's point of view, from a technical analyst's point of view, that it is respecting that $44,000 mark. Only time will tell whether that turns out to be correct, but it's something that we all need to be aware of and what the levels are to the upside and to the downside. But certainly we need to be aware that there is a strong possibility, a very high probability of a correction on its way very shortly. Also on the daily chart, if we have a look, and I've been showing you this for the last few weeks, is that there is a bearish divergence, as you can see down here. So while the RSI has been making lower highs, the price of Bitcoin has been making higher highs. So we are due a correction at this point here. So as we can see, the correction seems to have already started here. And it may well be that we push ourselves to the 51, 52 level before we have a deeper correction. So only time will tell, but certainly this is showing us signs that a short-term correction is on its way. A quick look at the 200 daily moving average. As we saw in the last few weeks, we've managed to crawl back up above this level here. So once we broke there, we had a continuation of the downwards spiral for many weeks here. But once we've now got above that, we seem to be finding support at these levels here. So it could well be that the anticipated correction that we're going to be having at the 51.52 maybe come back to these levels here, where the 200 daily moving average is, and currently that's at 46,000. So it may well be just a 10-15% correction from the 51.52 level. A quick look at the fear and greed index on the Bitcoin chart, and it shows that we've now come to the 72 level. So we've jumped from last month's 53, and we're now come to the greed level here, and we were yesterday at the extreme greed. So it may well be also telling us that a little correction is on its way, because we've just gone ahead of ourselves on there. So something very important to look out for. So as you can see from the actual chart, we've jumped from around here, which was only at 19 just on the 20th of July. So just less than 2 or 3 weeks ago, it was down there, and we've had a very quick rise up to these levels. So this is getting overheated as well. A quick look at the RSI on the weekly chart. Again, this is looking very bullish on the longer term. We've come up towards the 80 level on the stochastic RSI. So again, it's looking very bullish, but it could turn at these 80, 90 levels. So we could be coming down and crossing over at these points here. But certainly it is looking bullish for the longer term, and that's something we can't get away from. If you want to support the channel, then please click on any of my videos, and then below the videos you'll find a box called Show More, which gives you a description box, and in that description box is the affiliate link with Etoro that I have. So I partner up with Etoro because that's the main exchange I use for all my investments. These are the reasons why I tend to use Etoro. It's a very simple exchange to use in terms of depositing money and withdrawing the money, as well as trading if that's what you want to do, as well as for long-term investing, which is what I tend to do. So if you want to support the channel, please click on the partnership link, and then what you'll do is you'll get this box here, and then you can basically put your username, email and password and just fill in the form there. If you like any of my videos and you find value in them, then please don't forget to like and subscribe to the channel. Finally, to have a look at the daily pivots, to look at the levels that Bitcoin could be oscillating between. And certainly, if we look at the pattern here, it seems to be topping out. There's a topping out pattern happening, just like it did here. If you look over here, the R2 line currently is at 50,900 there. But as we know from the pivots, we do tend to protrude above these lines and also below these pivot lines. So it may well be that we protrude above there to the 51.52 before coming down. So again, this is something we could use as another confluencing factor, telling us that the ceiling for the current price rally that we've had in the last few weeks could well be around this 52,000 mark. And the R1 line down here, the level there again is at 46,000. So that's again telling us that the 46,000 could well be the bottom line here. The interesting one is the P line, the pivot line here, which is saying 37,000, and that's at the 61.8 level. So it'll be interesting to know whether we do come back down to this level, and that would negate the hash ribbons record of keeping the support always above whenever we hit the signal on the weekly chart. So fascinating developments on the Bitcoin chart. Extremely important to be aware of these so we can make our decisions accordingly. I showed you in the last video that we should now be preparing for the last 4 or 5 months to top out with the Bitcoin and to have a blow off top. In the comment section of the last video, I got this question here from Quantum Jump asking, do you think you can do one for Ethereum liftoff and exit strategy? This is something that I wanted to cover sometime in the future, simply because it is a question that keeps coming up time and time again. And I just want to bring something to your attention about this, which is very, very important. If I look at the weekly chart for Ethereum, and we look at the blow off top that we had back in 2018. Now the top was reached here on January the 8th, and a very similar top the following week. So we had 2 weeks of a blow off top here. Compared to Bitcoin, the blow off top for Bitcoin was here around December the 11th, the week beginning the 11th of December. I think it happened on the 16th or 17th of December here. So a lot of people say that, well, Ethereum topped out nearly a month after Bitcoin. So surely that's what's going to happen now. Now, what I want to bring to your attention is that this is only one data point. There is no 2 or 3 or 4 to give us some sort of a pattern developing. It would be very risky to think that when we have a blow off top, and our blow off top level is around the $300,000 mark here. This is our prediction that we're going to be topping off anywhere in these levels here. So when Bitcoin comes up to these levels, I think it would be very risky. I mean, it may well be correct, but it would be very risky to think that once Bitcoin has topped off here, that we should keep our investments in Ethereum, and that Ethereum will take another month extra to do that. Obviously, everybody has their own decision to make on that. But certainly, I would be taking all the profits when Bitcoin is coming and using all the exit indicators that I showed you in the last video, which are relevant also for Ethereum, I would say. So when Bitcoin tops out here, around about the 300, maybe 400 level, wherever it tops out, using our exit indicators, my own personal opinion and view is that I would be taking all the profits off the table for both the Ethereum as well as all the other altcoins that I have. Now, everybody has to make up their own mind, because it's my view that it would be too risky to think that just because Ethereum topped out 1 month or approximately from the Bitcoin in the last end of the bull market, that it's going to do the same here. Because one data point isn't strong enough for us to think like that, and it would be a very high risk strategy. It may well be that Ethereum goes on for another leg and then comes down. The risk is going to be that when Bitcoin tops out, that Ethereum may come back down as well with Bitcoin. You do risk losing quite a lot of your holdings there. The alternative strategy would be to take 80, maybe 90% off the table here and run 5, 10, 15, 20% further in case it goes up higher, and take them off the table when you feel comfortable to do so, a week, 2 weeks, 3 weeks later. I think we can formulate a strategy nearer the time. We're not there at the moment, but it's certainly some food for thought. So instead of looking at the exit indicators for Ethereum and the altcoins from a different perspective, because to me, Ethereum and the altcoins are all strongly aligned with Bitcoin. So when Bitcoin tops off, my strategy is that, or my opinion would be that altcoins and Ethereum are going to be following it, because generally speaking, in the previous bull market, that's exactly what happened. When Bitcoin topped off, within a few weeks after, the altcoins and the Ethereum also topped out, as we can see from here. This is the Ethereum chart. Within a few weeks, this is what happened to Ethereum. So between middle of January to April, we had a 74% correction. So within 3.5 months, we had a 74% correction. And then we know what happened after that. Went all the way down to these levels here, around the $80 mark. I think the question we have to ask is, do you want to risk this for the sake of a few weeks of a rally here? Certainly my answer is that I'm not going to be risking that. Certainly when Bitcoin tops out, I'll be taking everything off the table. I just think it's going to be risky to take a gamble on Ethereum and the altcoins continuing with the bull run after Bitcoin has topped out. Only time will tell. We'll have to wait until we're nearer the time and see what happens and what develops in between that time. If we have a quick look at Ethereum on the longer term time frame, on the weekly chart, I've shown you this red line many times before, and we'll continue to look at it because it's a very strong trend line which will prove to be the actual support for the next bear market once we top out with Ethereum and we meet our target of 21,450. That's our target for Ethereum at the end of this bull market. As we can see, this has got a very strong support there, support resistance, resistance, and then the resistance was broken here, and we drew these channels that this is the area where the price is going to oscillate for Ethereum. in the next few months before meeting our target here. And currently, if we just focus on this chart pattern here, because it seems to have followed our trajectory all the way through up to where we are now. This is currently where we are. We're in this ascending, broadening channel here. But within this, there is now a support line and a resistance point here. Look, one point there, one there. Then we flirted with this all the way along here. And now we're coming up to this point again here. So it may follow Bitcoin for a correction around this point here at around about the $3,400–3,500 mark. So despite the short term, we could have a correction, but then as we can see, the trajectory is to the upside. So we know this is going to be continued, but we may have a short-term correction here at these levels before moving on to continuing with the uptrend. Now, unfortunately, I don't have time to do a wisdom bite today, and that's very sad because I like doing these, and it's my passion in life to actually have a positive impact on everyone that I come across in my life. But what I would like to do is to cover this topic in the next video, and that is, if you had 5 minutes to address the world, what would you say? I think this is an amazing topic just to see what people think, that if you had that opportunity to talk to the world, so you got the whole world in front of you, maybe on Zoom or maybe on some sort of a social media where everybody's now paying attention to you. So what I want to ask you in the comment section, let me know what you would spend your 5 minutes telling the world. Please keep it to personal development and how a positive impact you can have to the world. I'd like to hear what you've got to say. So leave your comments in the comments below. I'll leave it there. I hope you enjoyed the technical analysis today. I'm very sorry I haven't had the time to do the wisdom bite, but certainly it would be nice to hear your comments in the comments below to see what you would say if you had 5 minutes to address the world. And if you found value in this video, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.